Hi, I'm Brandon Christy from Christy Capital Management with the March 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic events that occurred last month and give you some insight into what they might mean for you as an investor. Please stay tuned at the end for a required disclosure statement. The Federal Reserve and interest rates dominated economic headlines last month. To support the economy, the Fed has kept interest rates at historically low levels since 2008. Since bond buying operations ended last October, the next step will be to start slowly raising interest rates to quote-unquote normal levels to prevent inflation from getting out of hand. After the March Open Market Committee, Fed Chair Janet Yellen announced that the Fed is moving away from a patient interest rate policy and will start thinking about raising interest rates this year. We don't have a date yet, but many analysts think that rate hikes could come as early as mid-June. Though investors are getting nervous about higher interest rates, we know that the Fed will move carefully to avoid damaging the economy. Speaking of the economy, we also got to look at the final fourth quarter gross domestic product reading, which showed that the economy cooled in the last 3 months of 2014, growing just 2.2%. This brings overall 2014 economic growth to 2.4%, up from 2.2% in 2013. Investors care about GDP because it's our most comprehensive economic scorecard and shows us at a glance how the economy is doing. Though the relationship isn't simple, healthy economic growth generally translates into strong corporate profits. All else being equal, strong profits usually boosts markets. Digging deeper into the data, we see that strong consumer spending, exports, and business investment supported the economy. The growth rate decreases because of higher imports and lower federal government spending. To translate all of that into plain English for you, the economy was fundamentally on very stable footing at the end of the year. Though we don't have first quarter GDP numbers yet, clearly the Fed feels comfortable enough about the economy to think about taking away the training wheels. Looking ahead, as the first quarter ends, investors will turn their attention to corporate earnings reports to find out how U.S. companies performed. Right now, overall expectations are lower because of weak overseas demand, low oil prices, and the cold winter. Since leadership teams like to underpromise and overdeliver, we can hope for some positive earnings surprises. We'll know more in the coming weeks. Well, this concludes our March Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Well, we have 2 events in April we'd like to tell you about. Our first event is an identity theft breakfast to be held April 16th at the Christy Capital Management Conference Center. Seats are limited. Call Kathy Harris at 866-331-7749 to register. Also on April 16th, we are holding our annual Shred Day from 11 a.m. to 1 p.m. Join us for coffee and cookies while you watch your papers being shredded. Simply bring any personal paperwork you would like to have shredded to our office located at 2939 McManus Road in Macon. Please remember, the information shared in this monthly market update is not a recommendation. If you would like to discuss your financial situation, give us a call at 866-331-7749. It would be our pleasure to speak with you. Well, this is Brandon Christy with Christy Capital Management, and thank you for watching the March 2015 Educational Economic Update.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.